And I'm very happy to give over again to Benjamin Schaub, who is slowly becoming our second stage, right?
Hopefully, but this is the last time for this Crypto Assets conference, unfortunately. So thanks, Marcel, for the welcome. And also from my side, again, a warm welcome to everyone to the panel discussion on digital assets driving financial innovation. My name is Benjamin Schaub. I'm a consultant at Inters Tech, which is a blockchain consulting firm that has been recently founded by the Frankfurt School and Pluto Neo. So for the panel right now, I would like to welcome physically in Frankfurt, Andy Fleury from Algo Trader.
Yes, hi. Thank you for having me again.
Christian Labetsch from Blocksize Capital.
Hi.
Dr. Markus Henning from Define. And Robert Holzmann made it from PwC. So before we start the discussion, please go ahead and introduce yourself briefly. Andy, if you would be so kind to start.
Yeah, sure. Andy Fleury from Algo Trader. So with our key product, Wireswarm, which is a digital asset trading and execution platform, we help banks and brokers to start offering digital assets to their clients. So we're mainly focused on the trading space, knowing that that's not typically happening in isolation. So we work very closely with custody providers, with consultancy firms like Define and PwC, and sort of work in a conglomerate.
Thank you. Christian, please.
Yeah, so my name is Christian Labetsch. I'm managing director at Blocksize Capital, and for the last few years, I've been building compliant infrastructure along the value chain to issue, trade, store, but also settle digital assets. A very interesting time, and I think the best is yet to come.
Thank you. Markus.
Yeah, the best is to come. That's really nice, Christian. Yes, I'm Markus Hennig. I'm a manager with Define, and I've worked the last 3 to 4 years in the blockchain space, and we're building infrastructure with banks from all parts, from trading, from custody, and so on. And we're also working in other industries where we're also building like payment systems. That's from my side.
Thank you. Robert?
Okay, yeah, I'm Robert Holzmann. I'm senior manager at PwC Risk and Regulatory, and we advise, or I advise, exchanges, custodians, etc., on compliance and regulatory issues. And yeah, that's basically it. I'm part of the wider PwC global network in this regard. Yeah.
Okay. Perfect, thank you. So before we get into discussion, I would like to set the scene a bit for the audience. So when we talk about digital assets, this means that we're talking about assets that run on a blockchain system. This could be cryptocurrencies, utility tokens, security tokens, or CBDCs and stable coins, for example. So for the beginning, I would like to focus on cryptocurrency, and which obviously dominates the market heavily when it comes to the market capitalization. And just ask it right away, is crypto driving financial innovation? Who would like to start?
I would say definitely yes. Because I mean, what we're observing is like first that say in a traditional world, cryptos are observed and services are built at the moment. So there's a lot of kind of say background work going on where say banks say focusing on Bitcoin, focusing on Ethereum, and building new products and services, also like things like staking, custody, and so on. So there's a lot of things going on. I would call it not, I mean, it's not really kind of say financial innovation, but because it's new product and services, which maybe already exist, say in the crypto world, they're now switching to the traditional world. So it's a kind of say innovation flow going on. On the other side, we're seeing that the concept from the crypto world are also taking over. No, the idea of programmable euro is coming. You know, this is something where say Ether, or especially Bitcoin, provided a kind of blueprint for it, and this kind of technology is also now used in other products.
Other opinions?
Yeah, maybe I can jump in. So I think, cryptocurrencies itself, as you asked the question, I don't think there is that much innovation coming out of that corner anymore. I think all the other areas that you mentioned, DeFi, NFT, stablecoins, there is a lot more innovation coming from. And maybe also to add a little bit of controversy here to the discussion, in parts, the incumbent infrastructure is also still more advanced than the crypto space. For example, in the crypto space, there is no central clearing network. What I mean is, if you're trading exchanges, you have to pre-fund all exchanges, and this is something that's unheard of in traditional trading, where you have these global clearing networks. So I think, in parts, the crypto space is further ahead, is obviously driving innovation with new products. But in other parts, we're still lagging a little bit behind.
Would someone like to elaborate on that?
Oh, well, not really elaborating on that, but just add another dimension, and then we can maybe discuss all the three dimensions, or even more than what coming. What I just wanted to add is that not only from the crypto space as such, new products, and as we just mentioned, come up, but also additional services upon that. So we were discussing this beforehand, that, for example, in the assurance sector that you think of right now, of really automated assurance services, for example, because you have everything in the ledger. So why you need a bookkeeper anymore, for example? Or when you go, for example, into programmable smart contracts, you can, as Mr. Hennig also just said, integrate already compliance services within it. So without, you're not allowed to transfer some assets before not something happened, what you need to have as a compliance, and so on and so forth. In this dimension, I just also wanted to bring in as another point of view here in terms of innovation, where I think, yes, it does bring some innovation into the market, at least in the regulatory compliance space.
Definitely, and we will look into every processes that are happening in the backend. But now let's then look maybe at the other digital assets I mentioned at the beginning, looking at security tokens, NFTs, or maybe CBDCs and stablecoins. Which impact might these then new assets, as they gain more and more traction, bring to the financial space? Maybe, Christian, you would like to start?
Yeah, so there's this very fantastic thing called atomic swaps that allows you to exchange two assets simultaneously without any counterparty risk. Okay. Usually, when you look at how transactions happen in our current system, you exchange fiat cash versus a security. We do that through a process called delivery versus payment, okay, where we deliver the security first and then it's being paid. I think in order to fully utilize the benefits of that fantastic feature and also fully utilize smart contracts, we definitely need cash on ledger. Otherwise, we're still being, trapped into using delivery versus payment, because clearly we have to settle cash outside of the ledger. So, now bringing cash or any other fiat currency on the ledger is the next logical step. And this is something that the market desperately needs. Absolutely.
Thank you, Christian.
I completely agree with Christian, because as also mentioned in my talk, this is the kind of logical step we definitely need, because otherwise we can't build financial instruments on DLT. We can't use Ether or like Bitcoin. We need some kind of stable coin, and we have. It looks like we have all the tools we needed, but only the cash on ledger. So this is missing. If you would have that in a really nice way, you could be really, really creative. And especially also for security tokens. Say most securities, they have dividend payments, they have coupon payments. You can automatize all these things. It will definitely lower all these kind of, life cycle costs, But also Christian mentioned this with this DDP. At the moment, it's super complicated. It requires complicated systems. But if you think about it, it's super simple. It's just a swap. Nothing more you're doing. But in the old system, you have a lot of kind of risk and so on. So it just drives costs. If you can get down all these kind of costs, the security token, especially with security tokens, we open the space somehow. There's a lot of more innovation coming on if you can do that, because if you provide a cash on ledger, if you have a really simple DVP, a lot of people can construct some new stuff there.
Maybe if I can add on to this one here, cash on ledger. We're still looking for this, but I think we're already partially there. Obviously, with stablecoin. Take the Tether. The Tether is the most heaviest traded digital asset today. It trades typically over $100 billion per day, so it's already used as a means of payment. And I kind of see it as a predecessor to CBDC, which isn't really here today. I'd also like to take up Christian on his comment on atomic swaps. I fully agree. That's a marvelous piece of innovation that we've seen. Likewise, the DeFi space, especially the liquidity pools. That's something personally I really love. I've been in the trading space, so I've been working with exchanges and brokers where we had these central limit order books. So for decades, when you trade, it always went through a central limit order book. Now, there comes the DeFi guys, the Uniswap guys, and invent a new way to build an exchange using liquidity pools that works completely different, and it actually seems to work. So for me, that's really fascinating. And I in that sense, I see that a lot of innovation is coming out of the DeFi corner, and we'll see a lot more in the coming years.
Would someone like to add?
Yeah, I mean, what I will say to DeFi, it's fascinating. On the other hand, however, it's also fascinating, or will be very exciting what will happen then also in the regulatory space on how to deal with that. Because, well, of course, if you don't have intermediaries anymore, who's then to blame? Who's then to check? Who's then to know who interacts with whom? And it will be very exciting what kind of solutions regulators come up, what kind of technical solutions might be there, and how we deal with, because there, I think there's a lot of potential for clash, I would say. Just as a controversial statement again, that there will be some kind of a clash here, and this is going to be very exciting to work on solutions in the future on that. Yeah, definitely.
Thank you, Robert. And to get back to your point later on, so when we look at the financial innovation regarding the required processes that are underlying, for example, auditing, tax, and AML, from your side, Robert, what is the reality we live in, and what is maybe science and fiction?
Yeah, I would say, there's a lot of vision there. For example, as I just said, that there will be the fully automated audit at one point. There will be fully automated counterparties checks due to smart contracts and so on and so forth. Right now, where we stand right now, it's still a little bit fragmented. So we have different systems. You have a lot of different data sources. I just said in the presentation, and now you still have to trickle a little bit through the whole this process. And this is where we stand right now. I would say that you need, at the moment, a lot of integrated tools, I would say, or solutions where you have like off-chain data, on-chain data, combine them logically in some way or another. Let it be for tax, let it be for audit, let it be for AML, whatsoever. The more blockchain technology gets adapted, I think the more we come to that vision, but we're still, of course, not there yet. But we have to be prepared. We have to say that this is a likable outcome, that a lot of those services get automated at a later stage.
Thank you.
Maybe to
other opinions or something to add?
Maybe to add a little example here, today releasing a new bond and obtaining an ISIN typically requires about 17 manual steps in multiple systems. So there is definitely a lot of room for optimization. But we're talking about security tokens, even though they're not really there, at least they're not tradable yet. Launching a new security token, a regulated security, it'll probably be around the same. That there will still be a lot of auxiliary systems, that need to be synchronized manually. And this is again in contrast to the DeFi space. If you wanted to launch a new pair on Uniswap, it takes a single smart contract interaction, and it's there. That's it. There's nothing else that needs to be done.
Thank you. So we have been talking about payments on blockchain systems, which would definitely help innovation, and also already touched upon the regulatory space that is, let's say, complicated in the crypto world. Are there any other key enablers from your perspective that would drive financial innovation when it comes to digital assets? Who would like to start? Thoughts on that?
I see also, like, with a lot of kind of technology providers, it's not only in the crypto space, in this kind of community. There's a lot of kind of, service providers around which are creating, say, amazing products. I mean, we see it also like in the custody space or in a trading space. And we have to solve a lot of kind of problems within banks. And so there's a lot of kind of innovation coming, which not necessarily is connected like to crypto assets. It's something like multi-party computation, for instance, that you can couple multi-party computation with business processes. So this is something which is really, really crucial in, say, in custody, and or that you have like instant settlements. So there's a lot of things going on in a space where also, like, say, new tech providers bringing in a lot of innovation, which streamline really complicated processes in banks at the moment.
Also, Benjamin, I hesitated a little bit because this is a very complex question, which is difficult to answer. And I think we have to differentiate. If we just look at the crypto asset space, okay, so unregulated cryptocurrencies, I think a lot of infrastructure is already existing that allows you to intuitively to a certain extent, interact also with DeFi applications. You can trade on Uniswap, you can deposit in Compound and also loan, right? That all works for cryptocurrencies. I think for then security tokens and digital assets, we're at the very beginning. A lot of infrastructure has not even been, recognized to be built, right? You cannot use a security token and trade it on Uniswap or use it as a collateral on Compound, because you have to restrict fungibility of that, right? Through a constraint contract. So it looks so easy when you look at DeFi and see that billions being locked in smart contracts and being moved. And you tend to actually see things for the security token space in the same way, but this is completely wrong. You need a different set of infrastructure for security tokens. And this is where we are at the very beginning. No infrastructure for trading security tokens in a professional way is existing. Custody is a complete different story. Everybody's talking about what happens if you lose your private keys to your Bitcoin wallets. Yeah, your Bitcoins are gone. But using that same approach for security tokens is wrong, because if one investor loses the private keys to the wallet, nobody cares. If the issuer loses the private keys to manage the smart contract representing the security, that's a problem, but nobody's speaking about that, or at least wasn't speaking for that. And for that, we haven't even built solutions yet.
Thank you, Christian. Great points. Would someone like to add something to this question? Okay. So another point I would like to talk about is, and this is quite interesting, this panel represented because we have consultants here and also let's say someone from the product side here. So I think when we look at the market right now, there are a lot of great solutions to problems, as Markus already said. However, from the client's perspective, I think it's often very hard to choose a vendor, because you probably often need more than one. You don't need only one custodian, you need an exchange, for example, also, and maybe you need a third and a fourth party for an end-to-end digital process. So how do you see the market regarding this topic? Are there possible solutions? Will we see more consortia building over time? What is your view on that?
Yeah, maybe I can take that one. I think this is a huge topic at the moment, and we actually use a term for it. We call it defragmentation of technology. I think today, we have a lot of startups, a lot of tech vendors that have a great product. They know how to sell it. They know how to explain it to a bank. But the bank, as you said, they need more. They need custody, trading, AML, what else? So they need an integrated system. And what we often see is, that these vendors, they're good at explaining their own product, but usually that's where it stops. They don't have the full understanding for their partners, for their vendors that they cooperate with, and that causes a lot of confusion for institutions, especially banks, because they have to think about and come up with a concept on how to combine these different vendors. So I think it's very important that we as an industry, we work together. We try to come up with integrated solutions, especially for banks, and basically do the homework for them.
Yeah. For example, just to add here, I mean, this doesn't like play into the crypto asset sphere, but for example, in the supply chain blockchain case, it's fundamental that everybody works together. So here, there's the work within consortia already from the start, and there it comes together. Of course, for example, PwC is as a coordinator, for example, or some provider, but also every part of the supply chain from the goods vendor until to the trade finance provider. So and here everybody needs to work together from the start. If not, then it wouldn't work. And actually, well, of course, in the crypto space, single solutions can be sold on their own, but actually it would make a lot more sense to really also here have a combined offering, to have like the full scope as such already with the client, so that not those situations occur that you only have one part of the picture or see one part of the elephant and not the others. And this just to add here.
This is also something we are observing in, as I know, integrations work with different vendors. Is that, like, say, in banks, everything is highly fragmented. I mean, it's really hard to build an end-to-end process. I mean, going through the whole life cycle, say, of a digital asset requires a lot of work within the bank. I mean, you find a lot of systems, and you have to combine them. And if you look for vendors, I mean, often it was in the last years, it's also like, okay, you get a kind of single solution for something, and you have to bridge all these kind of solutions with kind of customized code. But what we're now observing is like, okay, there's more integrated solutions coming in, I would say, in recent months, recent years, where you have more this kind of the complete life cycle, from trade to settlement, to custody, to compliance. I mean, everything in one solution from different vendors. They have worked together, and it's much easier to piece these things together and connect with the other systems.
Maybe my 2 cents on that, and that goes in exactly the same direction. So humans are creatures of habit, right? And I've learned that over the last few years. I love the beauty of MetaMask and how to connect it to Uniswap. But convincing a private banking client that wants to diversify their portfolio, convincing them to use MetaMask has no advantage at all. For them, it's just hassle, right? They don't want to have that. So what solution ultimately is going to win, at least in the short term? This solution with the most interoperability and interconnectivity that can easily plug into existing infrastructure. A client wants to use the existing online banking without taking hours to set up MetaMask wallets. In the long term, that may change because user experience or demand for better solutions come up. But for now, I think this is the key aspect for all infrastructure being built.
Thank you, Christian. And then maybe to give the audience an outlook for, let's say not maybe the next 5 years, but maybe the next 2 years. What personally do you expect from the DeFi space? And also, Christian, as you mentioned, what will we see in the infrastructure when it comes to security tokens? Will we see new vendors coming up, new products? What is your view on that? Who would like to shoot first?
So let me give it a try, okay? We had different market cycles. So in 2017, we've been at the peak interest for Bitcoin and cryptocurrencies, and also the ICO boom. It took a couple of years for that market to actually grow up, but now BlackRock and other big asset managers are looking into that. So it took roughly 4 years, right? If you now look at the next trend, which is DeFi, I see a lot of exaggerated expectations for that. I see a lot of money in the market and a lot of bad use cases, in fact. The same will happen with DeFi over the next 3 years. And also looking at something that's currently coming up, issuing security tokens on permissionless platforms. This is so early stage that also will take years I mean, until this is mature enough to be used in a broader ecosystem. And we're just starting to build infrastructure. Of course, there will be at some point in time a specific point where we have also exaggerated expectations and some a sort of hype, and it will go down again and become more mature. And we see that for DeFi, and we will see it certainly also for security tokens.
And I just wanted to add here that when you see the regulatory process behind actually what you just said, Christian, on the like in which phase we are and which phase we come from, like 4 or 5 years ago, we're now catching. It's just my view with the regulation. We're catching up with the developments which happened 5-6 years ago, and of course, regulation. Is also, as we just said before, is one of the driver of mass adoption or of greater adoption. And if there's still this lag behind on that one, well, you can expect that, that there won't be like this switch overnight that now this time it gets faster. So there will also be this time lag also from a regulatory side. And this also plays in again onto the adoption side. And so I totally agree with what Christian said.
I think it's also
sorry.
I think it's also interesting to compare the DeFi space and the non-DeFi crypto space. In my view, DeFi space definitely is very innovative with a lot of new products, and I think we're just at the beginning. There will be a lot more innovation going on. Whereas the non-DeFi space, we think it's very innovative, but actually a lot of the offerings, the products, the technologies are being ported from the traditional space, especially the FX space. We just recently wrote the paper comparing the FX space and the crypto space, and the two are actually very similar. And a lot of things have been ported over. So they haven't been invented new, but they've actually been around in the traditional space long before that.
Yeah, I agree with my first speakers, because like what I'm also seeing is like in a traditional banking world, I mean, we're taking, say, innovation 5-6 years and from 5-6 years ago, but we have to build slowly infrastructure. It really takes a lot of time to integrate everything. So in 2-3 years, you wouldn't see any kind of DeFi protocols with banks. I mean, this will take maybe another 10 years, but I think it will be like maybe Bitcoin, Ethereum. I mean, like the cryptocurrencies, you will have some kind of products coming out. But I think people will work in the background for a little bit more, but what will be like productive will be what I just said.
Thank you, Markus. So I would like to use the last 2 minutes for some questions from the audience, which will change the subject a bit. But however, so how do you see the future of privacy coins like Monero, which are not compliant to regulations? How will they evolve over time?
That's a hard question, because I mean, there's things like travel rule and a lot of kind of compliance questions. So that probably will exist. I mean, you can't kill them, but I don't think they will find their way into the mainstream or to traditional banks. I mean, I think this is a clear no-go, because I mean, you have a compliance department, you have rules, and if you have something with travel rule which is looming, I don't see how you can implement that.
Also agree. I also hardly see. I mean, it's definitely be there. It's definitely still exist. But when you read also the papers from supranational authorities or our regulators, it's always like there's always this one phrase or this one scenario. Please, exclude anonymous coins from your assets, or don't onboard them. And so that's going to be a really tough world for them in the regulated world, definitely. Yeah.
And that's kind of funny, right? Because nowadays I can hand over a banknote, right? A physical banknote to somebody I don't know. I have full privacy. And the central banks are working on zero knowledge proofs to allow the same actually to happen in a fully digital world. Yet we are completely against privacy coins. It's kind of strange.
Thank you, Christian. Yeah, very good point. And also good closing words. So we already have to wrap it up. Thank you again for participating. Andy Fleury from Algo Trader, Christian Labic from Block Capital, Dr. Markus Henning from DeFi, and Dr. Robert Holzmann from PwC. Thank you very much, and all the best.
Bye.
Bye-bye.
Bye-bye.